and get $500 back, which is almost half of the loss there. I can then take a long again, and a push up, I can kill it. I can then take a short. And index markets do this a lot. Now, when they don't, and you've got a market crash, you can utilize those gains taken to shield yourself effectively overall. So if I keep playing, there may be a point where I get a larger market move the wrong way, but you can see I'm just range trading quite nice and easily. Kill that short there. It's very simple really in that regard. So you can take another short. Okay. And I would have liked to exit that long, but I didn't get the chance. In any case, I've made more on that short, so I can effectively just close that. And I can take this long. Okay, and I'm out for gains again. I can then take that short. And I'm out for gains again. Quite an energetic move there. So again, representing the swing that's possible. And I'll hedge again. Sorry, I'll add another DCA short. So this is really where we're going to be able to look at hedging this move. So you can see I've taken two shorts here. One is well out the money, and I've already taken some gains, which is helping, which is quite usual for a cycle like this. Okay, so I'm still out the money on those entries, price going away and away and away. Now, any real dip, I'm going to want to hedge some of that exposure. I've got 10 in play. So I could hedge maybe 3 of the 10, 30% to the long side. Okay, and my former long gains I've taken from my trading on this asset are always going to help. You're always going to have that usually before the market goes against you. So I've hedged long there, got $400. I can hedge long on a pullback to the 20 and 40 MA there. Now we're getting a bit more. So I can actually hedge 20% of the overall exposure, discarding what we already had to the opposing side. And any push up again, I can look to kill that. So I'm out for gains there. And I'm just collecting these long side hedge gains quite nicely and quite easily. Now I can actually kill that one off for a very small loss. And you can see just as the market goes, I'm just sustaining myself. Every single gain to the hedge side is just helping me as the market still goes the opposite way. Okay, so that's really handy. And that's really what we're trying to do here. Even though our positions are going further and further out the money, because essentially, the market is racing against us. It doesn't really matter what way you're trading it. Okay, whether it's a market crash or a market rally against your shorts, it's always going to be possible for me to last the move, if you like, if I'm hedging along the way. Okay, so this is particularly relevant now because of what's going on tariff-wise. But I've taken a long there, and I would have liked to kill it differently, but I got out there. Any real push to the downside, I can kill one of those shorts. Any push to the upside, I can exit the longs. But again, you can see my equity is never getting dangerous. In every single video we post on here, it's the same story. There is no danger in our entry. So I'll kill that long for gains again at the top, and I'll just take that one off. So you can see throughout this whole thing, okay, I've just collected long side gains over and over again. And that's allowing me to sustain 1,000 points the wrong way, or 1,300 points the wrong way. Now, ultimately, what will happen is the market will swing, as it always does, as a reversal, and I'll be able to exit those shorts and be out for even more gains overall. So as the market falls towards those former entries, what's going to happen is you'll start to see my equity get much more balanced and much more sustainable. And the gains I took before the rally against me, plus the hedge gains I've used to sustain the move against me, will all balance out very nicely. Okay? So this is just showing you what happens, if you're going to be able to hedge accurately. So there's $250 again there. When the market is pushing against you. Like I said, it doesn't matter really whether it's a market crash and your longs are getting ruined, or a market rally where your shorts are losing value. It really doesn't matter, because at the end of the day, as long as the sizes are right, I can always sustain the wrong entries I've taken. Okay, obviously there's quite a few risk management rules in there, but from a very basic perspective, you can see really where I'm going. Okay, so I can take 3.5 there. Now we're really pulling down. $370 back there. Okay, and then I can probably take 3 again there to the long side. I can kill that for $158, and a drop again, I can take another long. So you can see all the long side gains I've just taken are still allowing me to be fairly safe. I mean, I'm only in about 4% drawdown, which really isn't a problem. Now, obviously, you could have killed those shorts off you took a long while ago, and typically that's what we do. But the point of this video really is just to show you it doesn't really matter how wrong you are. If you can hedge correctly, really you can survive pretty much anything. Okay, so that's exactly what we're doing here. You know, the market is now, those positions before are well out the money to the tune of thousands of points, or at least 8,000. And I'm able just to keep long side trading where necessary. Okay, the drawdown still isn't even 4%. Okay, take another one. $245. Okay, take that off for a small loss of $8. Okay, a nice big dip here. So I'm going to take 4, and I want to swing that up here for $700. Nice and easy. Take another long. Probably could have made it a bit lighter. Kill that for $500. Another dip again. I will take one more time for $400. Okay, so I could have killed the former shorts now and probably just began to add the shorts back. But I'm just going to demonstrate how I still don't need to close those shorts out really until the market completely reverses, which inevitably it will. So I'll take 4.5 there. And on a larger push down, I can look at my equity and see what we've got. Okay, so $700 or so. At that point, you can see now the long-term short side trajectory that's forming. So I'm going to look to plan some hedge longs again. Okay, I'll get long. And I'll kill that $230. So you can see I'm just not adding any shorts. If I was, I'd be making a lot more. And typically that's what we would do. We would kill the shorts we got wrong off with the hedge gains. And then that would allow us to basically re-add them later on. Okay. We'll just see where this ends up. So I'll take another 3 there. Okay. Nice. $500 there. $30 there. Okay. And I'm still, you can see, no matter how far wrong we could go even higher if you want. It's just not going to matter. Drawdown's still only 2%. Okay, now coming to 4. But still, we should get a larger dip, I'd imagine. Which we do. We can take a long. We can kill that for 185. Okay. And like I said, it doesn't matter how far out the money we want to take it. Just doesn't. We're still fine. Another 300 there. Okay. Dip back. Perfect. Another 4 there. Excellent. So here's the market fall we wanted. So coming way down now. All right. So now we can have a look. We're now in positive territory. We got to 7,800 points off from, how much was it? From our original 6,000 being wrong to 8,000, we're still not losing money. So the point, like I said, of this is just to get you to understand how it doesn't matter really how wrong you are with our method. Okay, I can pull that one off for a loss if I want. I can take that one off, and then I could just reshort 5. No, we wanted a short. His price looks weak-ish. And okay, so I can kill that. And I'll just take something light long. All right, and we're up and down and up and down. Kill that one off. And you can see, no matter how wrong we are always in the money. I could close that. Okay, and now we're coming further down, and I could close that, and a swing taking us 1,800 points out of the money the wrong way is still leading me to gains. Okay, so it doesn't matter what happens. Like I said, every single video I'm filming, it doesn't matter what happens because my win rate is so high and the risk is managed so well. Okay, so it's nice and simple that way. Of course, you would trade a wider portfolio with more assets. You would trade a different size for more profits. You would deviate your sizes. You would take more trades than I did. So the profit overall would be a lot higher. But the point, like I said, is to just show this on the daily so it's easy to see, and how if you can hedge comfortably, you shouldn't have a problem sustaining your equity no matter what happens, which is particularly relevant now. If you want to learn how to make an income trading in a safe and reliable way, go under this video and come and join us.